The markets came back to trade for 2024 with a couple of conflicting sets of data to digest. The first was the official manufacturing sector PMI, which was released at the weekend. And the second was Caixin's private survey of the sector, which came out this morning. Both of those focus on different portions of the industry. The official figures look at larger state-owned firms, and the Caixin PMI covers medium and smaller-sized private firms. The official PMI showed the sector shrinking at a faster pace in December, while the Caixin numbers pointed to the opposite: more orders and a faster expansion for the private sector. But with business confidence still lacking in both surveys, the markets fell today. The Shanghai Composite Index shed about 0.4%. The Shenzhen component was down by 1.3%. There were losses for tech, consumer, real estate, healthcare and financial stocks. Automaker BYD also declined, despite the latest sales numbers that interestingly show it likely to overtake Tesla as the world's biggest seller of pure electric vehicles. BYD posted a 62% jump in 2023 sales, with a record 526,000 pure EVs sold in the fourth quarter of the year alone. If Tesla wants to keep the crown, it's going to need similarly strong sales in the fourth quarter, well ahead of what analysts are expecting for the firm. For Hong Kong markets, it's a new year, but not much has changed. The Hang Seng was off by 1.5% today. Real estate stocks continue to be a serious drag, as sentiment there remains very weak. An index tracking mainland developers listed in Hong Kong was down more than 4.5%. Longfor Group was one of the biggest decliners, shedding 7%. Japanese markets were closed today, and they'll be closed again tomorrow for a market holiday. But other Asian markets were doing okay. Australia's ASX 200 advanced 0.5%, and South Korea's Kospi 200 was up 0.7%. Both of those locking in some gains for the first trading day of the year.